Now you can hear me. So we get a lot of calls from clients asking, first, to explain blockchain, and second, what they can do with it, which is a little interesting. It's much different than security, for example. You know what you need with security. And what I like to boil it down to, because enterprise blockchain is not using all the revolutionary features of blockchain, it doesn't use distributed public consensus for fault-tolerant communications. It's really mainly using the distributed ledger technology. So in a sense, it's like EDI 5.0. It's a shared single version of truth across multiple entities where no one entity is in control. And it's immutable data. So think about food safety, tracking food from the farm to the restaurant. Think about pharmaceuticals. It's very good for asset tracking. It's good for payments also, but that's where I see the main value, where there's no one entity in control and multiple entities share an audit trail, basically.
Yeah, thank you. Just to add to that, so our firm, we deal with organizations all around the world, and the biggest question they have is, what am I paying for, right? What am I getting for this? And the answer I usually give is, okay, well, we have two options. One is solving problems, specific challenges, and data integrity is at the core of that. So data integrity, where you have multiple stakeholders, a single source of truth. Supply chain is a core area where data integrity is very important. And then the second is, okay, if I'm solving problems, how can I actually generate value? So then you're looking at creating liquidity into illiquid asset classes, and then you look into more of the financial use cases of this technology. So when it actually comes to pricing a enterprise blockchain solution, there is still a lot of discovery, I think, that needs to be done, because how can you really put a price tag on a lot of what you're selling? But then when you look at some of the benefits to increase transparency in supply chain, responsibility in your supply chain if you're dealing with labor issues, I think that's where organizations are really seeing the value.
So I guess I agree with both, but I think there's a sequence, which is I think you start with Avivah's common source of truth, and that allows organizations to drop money straight to the bottom line through savings. So I think the first step is you take inefficiency through settlement processes, or the case. There's so many places where 99% of the transactions, whether it's a financial transaction or a supply chain transaction, large bulk of them go through with no problem. A small number have a ton of friction, and that friction is really expensive when the two parties have different records, et cetera. So if you can take that out, you drop that inefficiency to the bottom line, that savings, boom. So that's definite ROI. I think these other things, when you start thinking in terms of, okay, can I speed up factoring? Can I find some other ways to do these financing? I think those are going to come much later in the process. And so it really means if people are trying to do something now, they better figure out how they can get the saving now. I do think there's another category, which is, can I convince regulators, auditors, and others of the veracity or the truth of what I'm saying, which is kind of another way of dropping something to the bottom line, because now those people don't have to come in and audit. I can just give them a copy of this common truth. And the common truth can now not just extend to the partners, but also to the regulators and the auditors. And that one's going to take longer, because these are not organizations that change quickly or easily. However, I have to say in my career, being able to say, wow, we could reinvent audit, who'd have thought? So that's going to take a while, but that could be a real significant improvement for everybody.
Yeah, I'm glad you mentioned that. I see that too.
Well, I want to focus on that actually, and I think the ability to audit and to provide trust that is provable is not only for regulators, it's also for users and partners. Yeah, in general. And I think that we are not seeing yet. The disruption we're before the disruption. And I want to give you an example of use cases that we don't see in the wild, but this is where I see the future. For example, I was taking Uber a while ago in New York Blockchain Week. And in my Uber drive, they showed me that the drive will take, I was late for a meeting, I wanted to take either the subway for 30 minutes or Uber for 30 minutes. And I took Uber because it was more convenient, and at the end of the day, it took an hour, and I was late for 20 minutes to my meeting, and it was a very huge problem for me. Now, I can come to Uber and complain, like, why did you show me 30 minutes when it was an hour? And they could say, no, just trust us. You know, traffic, we can't know that. But what if we had some way to add accountability for this? And I believe that users are going to come to demand that in the coming years. For example, imagine, and we can solve this problem today with blockchain technology. Imagine that every time that Uber shows an estimate, they would write it on an immutable ledger somewhere else that they don't host. And every time you reach your destination, they would write the time that it took. And at the end of the year, we could see what is their percentage versus Lyft. If they had 50% correctness and Lyft had 20%. And the fact that you can run it on somebody else's ledger and prove that this is the truth, this is the game changer. Because if it's from your own servers, this is not a paradigm shift. So I think we won't see these. It will take some time, a lot of education, but this is, I think, the trustlessness is the core of the value that we will see.
Yeah, I agree with Tal. From an enterprise point, actually right now we are just at the very beginning of discovering this technology. The applications are limitless, but right now we are taking the initial steps and you are discovering more and more possible use cases. Initially, it will start off with a permission kind of network. Gradually, the potential will be there, and in terms of industry partner acceptance, it will gradually evolve in terms of use cases as we move forward.
Try to hold the microphone more closely. Okay, thank you. We will move to the next question. Now, we have here in the audience a lot of really senior managers, engineers, which are eager to implement blockchain into their activities. We know some of this project and area maybe will fail. Some of them will be more successful. How you categorize from your experience, from your real project implementation, from your customers, what is the guidance that you will give to our audience here? Which projects and which area are more likely to be successful? Where they need to be aware of failures in this project? And what type of project you will really, from your experience, will avoid at this period of time using? Yes, start.
You go first.
Yeah, so I think it's always key to start off with the lowest hanging fruit and the easiest, let's say, part of a process to implement. So I'll give you an example of a company we were working with in Japan that had an issue with fraud in their customer onboarding lifecycle, where customers were submitting documents and the internal team were tampering with those documents so that the customer would benefit from larger loans. Now, in that case, you can't completely transform how this company does business. So we started off with just one incremental area, which was the initial document exchange between the client and then replacing the internal employee and going straight to the compliance department so that you would reduce that fraud from taking place. And then as far as blockchain technology is concerned, we just created a hash value of the document, a timestamp, and a nice little interface around this so that the compliance team could see, okay, this document was this state at this time, and then if that document then gets shared at a later stage, they can see that the state of the document hadn't been tampered with. That's a very, very simple use case, and this is a major publicly listed real estate company in Japan, and that has now completely replaced their entire process. So that has now then provoked them to see how can we then implement this in other areas of our business. And so my point is, this was the spark. There was the problem, there was a challenge, and what we did was very, very simple. And now we're seeing how we can actually implement blockchain across the whole organization.
Well, so first off, I have to say you have to distinguish a couple cases, right? I used to be a VC, so if you're in a startup, you get some interesting people doing some POCs, and if you make enough noise, maybe you can get a quick exit and you're done. You don't really necessarily have to build a business. When you're at VMware or you're at a larger company, actually you have to build a business because we don't get an exit. So in our scenario, we look for a couple things. One is, does the customer really have an ROI? And as I said before, that really means can they drop money to the bottom line through an improvement in efficiency? Okay, but it turns out that in blockchain, one customer, it's all about sharing. So you need to have a consortium, whether you call it, it's really formally called a consortium, whether it's a club, whatever it is, but it's some group of organizations that are going to share the data. If that group isn't already pre-formed and you're doing a startup, you're going to be out of money by the time the governance for that group gets worked out. So you need to sort of actually find a group that's already formed if you really want to get something done in a reasonable period of time. The best cases there are if, to be honest, the group's not only pre-formed, but they actually already have a system that maybe they put into place a long time ago, and they need to replace it. So they know they need to replace the system. You've got a consortium. They figured out that that there's actually savings. Those are the really good opportunities. There are very few of them. The final really important question is, do they actually need blockchain, right? Because, there's a lot of people that will sign up to do a POC or something just because blockchain's popular, but they're not stupid. They'll eventually figure out whether or not they need it, and if they don't need it, then they'll go use the database, and you've wasted your time.
So I think one of the main things is for people to keep it simple. Most people just don't really understand blockchain unless you take the time to understand it. And if you want to implement it, you definitely have to understand it, and you have to keep it simple. So what we did at Gartner is we came up with a decision tree. We actually have a 3-part decision tree, and we walk the clients, do you need A, B, and C? And it really makes it much simpler. So we based it on NIST, but we expanded it. They had a decision tree. And it's basically, do you need a consistent data store? Do you need an immutable audit trail? Do you need immutable data, append only? So do you need a forensic history of exactly what happened that's more or less tamper-proof? I mean, nothing's 100%. And are the entities that write the data having a hard time deciding who's in control? So it does not make any sense to implement blockchain if there's no trust issues. So if it's one organization, even if it's a global organization, I mean, there's always trust issues everywhere, but theoretically there shouldn't be trust issues in one organization. But if you've got multiple parties to a transaction and no one is in control, so think about invoice and payments, for example. The invoicer is not really in control, the payer is not really in control. At that point, it's nice to have a shared record of what the truth is. So you have to think about multiple parties, shared truth. And in contradiction to some of my colleagues here, I don't think enterprise blockchain is a revolution. Not that you're saying it is, but keep in mind permission blockchain is management by committee, and we all know how well that works. So the consortiums in the process are the biggest hang-up, because the technology is just a protocol, so understand it's just a protocol, understand when you need it, don't confuse it with a complete business solution. Don't think smart contracts are all solved today. Don't think it's a database. Figure out when you need it. And frankly, enterprise blockchain, to me, is a pretty simple proposition. It's a shared immutable audit trail. When we start seeing public blockchains, like you mentioned, then it becomes a lot more exciting. And we can certainly talk about that.
So my recommendation from failures that I see is start small, baby steps. And baby steps is important because the feedback cycle in the organization for blockchain is long. It's going to take a lot of education to learn the use cases, to educate your developers, and to implement it in the business processes. And it's not easy. And if you end up doing all of that and investing all of that effort, and then you end up having a system, and the business people see that they don't get the value that they expected, that you're going to get burned out. And this is the biggest risk I see all around. So what I would recommend is don't try to replace a huge existing system. Don't try to change a process that is core to the organization. Okay, the technology is fragile. The use cases are still fragile. It's very immature. Start very, very, very small on something that has very small impact on the organization. Have a success there and start growing it. That is mine.
I'd just like to add on what Thomas said earlier about the low-hanging fruit and the point on immutability. Now, we implemented the system, right? What was interesting is that compared to some of the typical projects that we have handled, as database, okay, you have typically after cut over, you have some verification transactions on your production environment to make sure that things are really running well, etc. So now that we implemented blockchain, we find that our hands are actually tied because whatever verification transactions that you do basically get stuck there for good. So it basically puts you in a different mindset. That to me is already a big game because it is something which before we cut over, you may probably anticipate this, but once you are really in that situation and you realize that your hands are tied, it makes you behave in totally different way. And this is very important because today our databases are handled by multiple vendors, people change, etc., etc. So this simple word immutability actually has a big value in itself.
Keep the microphone because the next question is, first of all, to you. I'm sure all of you which came to Israel by flying, or I'm sure I'm not think that anyone came with a boat, use airlines. And when you are using airlines, you collect points. Now, collecting points is very nice. You can use it for different purposes. But Singapore Airlines take it one step further. And they implemented the project Krispay. And I would like you, please, to explain why you use blockchain and what is also, if you can give us some highlights about the future of Krispay, where you want to take it.
Okay, maybe I'll just explain why Krispay first. Right, Krispay is actually an extension of a typical airline loyalty program. Now, basically, it's to give our customers options. For as little as 10 cents, basically you can use it to buy a cup of bubble tea, go for a hair salon haircut, petrol, even a piece of cake. Now, there are times where, for even frequent flyers, possibly you got miles expiring for that year you're not traveling, and also at the same time there's a large segment of users who travels less frequently, and for them, basically, it gives us an avenue to engage them, and for them, it also gives them a reason to fly with us. Hey, basically, even if I do not fly that often, I'm still able to use your miles. And even for one-time travelers who basically visit Singapore, the moment you fly in, a few hours later, your miles is in your account if you register as a KF. Immediately, you can use it for various purposes once you hit the ground. So that is why we basically started this, in essence, to give our customers more options. Now, to the question, why blockchain? If you think over it, basically our use case is just an account, and it's about miles and transaction of miles. And this use case has been proven in the crypto space for quite a while now. And it has inherent cryptography built in. It has got multi-node resiliency. It's immutable. It's basically, for this use case, we find a very good fit. And on the other end, there's a consortium of merchants, partners, that we can extend this into eventually.
I would like to switch a little bit the question to technology. And from your experience about what is the next technology in blockchain that we should look into. For example, today the majority are looking into zero knowledge proof. The majority of companies already have some kind of zero knowledge proof implementation or in their website. What is really the cool technology which will take the blockchain to the next level? And if there are startup companies that you found very interesting around this area, what do you think, please?
So for the enterprise, I think enterprise users shouldn't worry about the blockchain platforms. They shouldn't care about all this, upgrades and how it's changing. What they want to do is get the data out of the legacy system and write smart contracts and automate tasks across organizations. So anything that gives the enterprise independence from the back-end platform shields them from the mess and just allows them to do their job. There's lots of other interesting technology, the one that makes it scalable, key management, I think. There's a lot of cool stuff going on. But to me, for the enterprise, that's the most important thing. To get the data out of all the legacy systems, of course you need data standards, and that's not so easy. And to write the smart contracts, like the Intel person was talking about, having this independence. There's one vendor named Chainlink that I think is pretty cool. I met them at Consensus, and then next I read they have this agreement with Google to take data out of the BigQuery system and help. It's basically, I think Google's trying to become a search engine for blockchain data. But they are really good at taking data from any kind of external system, and they run a decentralized Oracle system. Oracle is just the word for getting the data out. It runs the data. But they actually validate the data. So let's say you're sending exchange rates to a stock exchange. That goes through Consensus to see that this is actually valid data. So I think they're pretty cool. They take the data into the smart contract. But I don't like just mentioning one vendor. So do you know another one that does that?
No, it's, we try not to make them a currently publication here around that, but it's more generic things.
Yeah, the generic category. Anyone else?
Okay? No problem. Okay. So from your perspective, which countries today are most advanced related to blockchain? You can look from two areas. One, from startup companies in blockchain, or from the regulator in these countries really pushing faster to adopt blockchain technologies in these countries.
Yeah, so I'm fortunate to be based in Japan, and for those of you who are familiar with the space, Japan is well known for having made some big strides in the area of regulation around cryptocurrencies and blockchain technologies, and what that has facilitated is a lot of actual implementation by large Japanese corporations of both cryptocurrencies and blockchain technologies. So most of the major Japanese banks, Line, which is the biggest social messaging platform app in Japan, already announced its own cryptocurrency a year before Facebook did. So all this is happening by major institutions in Japan. China, mainland China, similarly, large companies and financial building their own blockchain platform. They've invested in blockchain companies here in Israel as well. So I think when you're talking about large institutions, corporates, China and Japan are really far ahead. But when I look at jurisdictions where you have regulation pushing as well the large corporates into play, I think Singapore has to be the best, if not one of the best jurisdictions globally on that level, with just the access you have to the regulators, but also the innovation that they're pushing top down. That would be my takeaways based on where I sit in that part of the world. But I'm curious to hear what else is going on in the US.
I want to mention another country in the Far East, and that is South Korea. South Korea, I think, is amazing. We go to many corporations and we talk about blockchain. And blockchain is to understand the nature of the disruption. And understanding the nature of the disruption is difficult. It takes a long time, and it takes, you need to be willing to try and play with it and see how it can change your business. And in South Korea, this is amazing. You see the biggest corporations around willing to experiment with this technology, I think very bravely. The community there is very open to the notion, although of cryptocurrencies themselves, but also blockchain for the enterprise. And even the government, the mayor of Seoul came here a few months ago, and he actually came to visit our office because he wanted to learn about blockchain. So this is, in my eyes, amazing.
I was going to say the same thing. Korea's got the most innovation going on with everything, with mobile, with blockchain. And also, if you're looking for innovation, I look at cryptocurrency areas that are low regulation and low taxation. And that's where you're going to see most of the innovation. So Korea fits into that. Malta, Switzerland, and those are the three that Italy has very low taxes but high regulation. So you have to look for both being low. And the crypto companies are really where the innovation is, more so than in enterprise, I think.
So again, I think I look more at the things where it's not just experiments, and a lot of noise, but people really starting to do things. And there I agree on Singapore. I think there's a lot happening and a lot more commitment. And although not as publicly visible, there's some things going on in Australia where, regulators are allowing people to do some surprisingly big things. So it's again less of the experiment and more of the real.
Okay. Now I told you to prepare your questions, the audience. So now I need a volunteer which would like to ask a question, the panelist. But please, short question. We don't know now that you will give a keynote. And just come near the stage so I will give you the mic. So which one want to come? Please.
All right, so I'm from Intel Corporation, so I have one question. One of the trends that we see in the industry for end users, so we talk about enterprise, as we look forward for broad adoption of blockchain, one of the challenges we see is obscurity. And regulators will also be concerned about the adoption of blockchain as they see it as a technology is a bit obscure or complicated to understand. Can you comment on how can we move this forward by making it more transparent and understandable to end users, regulators, and society?
Thank you very much. Okay.
So I'll take a crack there. First off, I think in general, open source helps a ton. It doesn't necessarily help the regulators. They're not going to sit there and read the code, but they can have at least some confidence that the code itself is somewhat transparent. I'm going to take a bit of a contrary view here and say, actually, again, from, say, the perspective of regulators, that a permissioned private blockchain is actually much more decentralized and trustworthy than a public blockchain. So when they look at the public blockchain, you don't know, the reality is almost all the public blockchains, in fact all of them that I'm aware of, are controlled by a very small number of parties. So, here we have this thing that is super complicated, as you say, super, hard to really figure out. You don't know who all the players are, etc. And the one thing that they promise is decentralized trust, except when you go and look at them, you find that's the thing that they don't deliver. So if I'm a regulator, I kind of look at this and I go, okay, this is really scary. Versus if you have a more permissioned environment, and I think you were alluding to this as well, and you have a sense of, okay, we understand that there's a group of players, that there's a decentralization of trust amongst those players. So it's not fully public. And of course, then the regulators know whose throat to go choke when there's a problem, and that's important to regulators. I think that the other thing that worries them on the public blockchains is mostly they're being used, for currencies of various sorts. That's how they're kind of making their living, and that's their business model, which is not necessarily what the what the application is. Often the application is these distributed ledgers that we've been talking about. So you've kind of got this thing. It's got its primary mission. It's going to get, so this is what causes the confusion, right? It's going to go in a direction of whatever's good for this token or currency when the application is somewhere else. And then it turns out the people using the token are mostly using it for nefarious purposes. Ransomware attacks, to get paid for kiddie porn, all sorts of, not very good things. Those are, other than speculators, that's most of the use. So, if you're a regulator and you want to have some legitimate thing cohabiting with that, that's pretty scary.
I want to comment about the permissionless versus permission aspect that you talked about as the first protector of permissionlessness.
But before,
yeah. So I think it's an interesting combination of you need some permission things and you need some permissionless things, and the trick is choosing which is which. So for example, control needs to be permission because, you can't have someone changing your data without you willing to do that. And this has happened on public blockchains like Ethereum, which is a huge, huge problem for certain applications. But you need to have permissionlessness in auditability, for example. And this means that anyone, either the regulator or anyone at home, could go check the data, run the algorithm, and see that they get the same result. And in order for that to take place, a permissioned and private blockchain inherently does not allow that. Okay, you need some permissionless aspects so anyone can audit it. And I think this regulators will respond to.
Don't fight, it's okay.
Let's fight over this. I wanted to answer the question that was asked. The question that was asked is how can we add transparency? I think the target audience that I'm aiming for to add transparency for is developers. I think once developers figure out what to do with this technology, we can take it to the next step. And this is difficult for them because technology is complicated for developers. In order to make it simple, I think, first of all, we need to start moving away from the financial token-based use cases because this is not the whole thing blockchain is. It's not tokens. Okay? Blockchain can change many processes in many organizations, and it's not only cryptocurrencies. So this is the first thing. We need to start showing these use cases to developers in open source. And to do that, we need shorter feedback cycles for these developers. They can need to go online, they can play with an online IDE, they can try it out, and they can see results within a few minutes. And the companies that will be able to do that first and show developers value in the process of 30 minutes, these are the ones who will teach blockchain. This is something that personally we are trying to do right now.
So I just want to add one thing. When you think about transparency and visibility, blockchain is not really that much different than a database. You need the same tools to audit, to analyze, to onboard customers, to look at account takeover. So people confuse the data security with legitimate data. So in other words, the data is very secure, but it doesn't mean the data is right, because the bad guy can take over his account and write data just like they take over a bank account. So I think it's the same security and fraud and analytics tools on blockchain that is in any other environment. It's a little trickier and harder, but it's the same concept, from what I think.
Just to add very quickly 2 words, Facebook and Libra. The reason why I say
I was surprised until it took you 30 minutes to come to that, so you will get the prize number 1 of this delay. Okay.
Because I think this is actually one of the biggest, let's say, news regarding this industry in the last couple of weeks, and it forces regulators to come to the table. It forces users to understand what is going on. If Facebook and all the other companies in this Libra consortium can pull this off, you have maybe 2 billion or more users which are suddenly have this ability to use a form of cryptocurrency. And yes, it's partly permissioned, partly permissionless. So it's the best combination of everything we've just discussed. And it's the first time you have a major global institution with more of a population than all the major countries combined, forcing this as a thing to be adopted. So I think watching how Libra progresses will actually be a signal for how blockchain technology becomes mainstream.
Thomas, I got a message from Facebook. Your Facebook account has been blocked. Okay. We will ask another question from the audience. Who would like to come to ask the question? But you need the mic. We don't hear you. Yes? Okay.
Real estate global market, $250 trillion. Real estate market, $500 trillion. Can you give your view 3 years ahead about liquidity in those markets?
Sorry.
Can you repeat the question?
It was very hard to hear you, so I will come to you.
Sorry, I just have one short question. Global real estate market is $250 trillion size. And derivative market is double, is more than $500 trillion. It suffers, those two markets suffers from liquidity problems. How you see this market 3 years ahead?
Thank you. Okay. Panelists.
Well, I think you're seeing, I mean, I'm just going to jump in unless someone else wants to comment, but I think you're seeing now a lot of developments in the so-called security tokenization landscape, looking at trying to bring liquidity to what are currently illiquid assets. I think the main challenge is around regulation. I think there are some jurisdictions who are ahead on this area. The UK is one of them, where you're seeing $100 million real estate projects suddenly being tokenized. But the question you have is now, where can you trade these? Where are the exchanges? Where are the institutional type of trading platforms where you can have these alternative assets that can be traded in the same way that you can trade cryptocurrencies today? I think that's coming. This is in development. Not to plug my company too much, but this is something we're doing. But again, I think that is something you'll see. Maybe not in 3 years' time, 4 or 5 years' time, but that is definitely the trend, the whole security tokenization of currently illiquid assets.
Yeah, and the only thing I'd say is when you put 3 years and I take a look at how long it's been since we've had a recession, and I kind of go 3 years from now, liquidity in the real estate market, forget it. But 10 years from now, we could do a lot.
Yeah, that's hard to predict.
Okay, another question from the audience, and I'll come down. Yes, 1 second.
I just wanted to relate to another area that Jacob really said in the beginning, in the opening remarks, regarding the medical data, and I'm applying even more to the clinical, to patient clinical data. So the question is not only how secure it could be, but how could we provide and ensure reliable analysis of all data as is, and not just, distributed or something like that.
Thank you very much. Panelists?
Well, so that one I think, I don't think blockchain is particularly one way or the other for your question, but technology that I think it's sort of been progressing for more than 10 years now. It's differential privacy. This started with, it's a beautiful story because it started in that sense with theory-oriented researchers, actually stopping and saying, we don't really have a definition of privacy. What does it mean? And essentially coming up with a mathematical representation of privacy that's particularly suited to this problem of saying, and the simple portrayal of this is, you'd like to be able to analyze the database and say, if I analyze it without a certain entry, without your data, and I take the same database and I analyze it with your data, the difference between that, if I can think of it from a statistical point of view, gives me some sense of how much privacy is being lost, right? And so that, there's now a whole theory around this. So, we haven't solved all of privacy, but actually in this one place, I think there's really hope of being able to put the sort of analysis you're talking about, particularly for that community, on a very solid footing where we'll have it like all the way down to the math. So differential privacy, you should check it out. Cynthia Dwork, she did this work initially at Microsoft Research and is now at Harvard. And she might even be in Israel for this conference.
I don't really have that much to add, but if you're talking about keeping data private, there's different ways to do that, but one main way is not to store any data on the blockchain other than a hash of it. So you just have a reliable history of how that medical records change, for example. You have the provenance, you can be sure this is what happened to the patient's history, but none of that's on the blockchain, just the hash that links to off-chain data. That's usually the best practice.
Okay.
Another question from the audience?
Two short questions.
please take a role of members of the board of acquisition in your organization. And what is your recommendation for buying the startup in blockchain? Which blockchain company your organization should buy now, if you are a member of the board of acquisition of your company? The first one. And second one, here are many startup guys, young people. What to avoid when they start their startups in blockchain?
If you have a startup already, you will see me, I'm interested in you. Okay, very good questions. Panelists.
Okay, so first of all, I'm a representative in a small blockchain startup. So I can answer the second one. What to avoid when you want to open, if you're interested in startups and you're considering blockchain, what would I avoid? So the biggest thing to avoid in my eyes is the temptation. Why temptation? Because funding is difficult in every startup. And one of the things where funding has been easy, relatively speaking, in the last couple of years is blockchain. Why? Because there is so much hype. So people start with a very weird use case that doesn't show a lot of business value, and it's relatively easy to get funding for. And then you say, okay, it's easy. Why won't I do it? Because I can get money. So avoid this temptation. Why? Because it's maybe easy to start, but it's very hard to follow through. Because when you start and when you're looking for customers and you don't have the business value behind you, then no matter how much funding you got to kick it off, it's going to be a dud at the end of the day. So this is the main thing. Also, I would avoid all the regulatory gray areas. This is another problematic issue. Why? Because we're seeing a lot of new and innovative ways to raise money or to operate your company. Many ICOs, for example, are a regulatory loophole. I don't know. And when you have those, also, you know, the biggest problem with regulations is when you don't get a yes or a no, is you get an I don't know. And an I don't know is bad. Why? Because eventually they will know, and if you're on the wrong side, then you have committed like some sort of an offense. And this is a problem, and you need to watch out for that. And you need to be very, very careful in the risks you take in the I don't know areas. So these are the second. And for the first question is, which blockchain startup to acquire if you were head of acquisitions? The answer is very natural, and that is Orbs. No, it's a decentralized project. You can't really acquire it. So I'm just kidding.
If you want to know the answer, you have to become a Gartner client, and Nancy will help you.
So it sounds like people should invest in Gartner. That's what I'm saying, is because you're going to basically hold everybody to ransom to get the answers. But obviously, I can't talk about as a corporate executive about what I would be recommending to buy. I do, as a former VC, I can say there's a real problem actually with the surplus of funds, which is you're stuck in a quandary because VCs will want to get roughly a good VC will probably want to get 20% stake, and so you're going to give up 20% of your company, so you want to get as much as you can for that 20%, because they don't want to just take 3%. And so you're stuck actually taking way more money than you need and at a very, very high valuation. And then when there's a shakeout, you're going to have the problem that if you take that way much more money, you're going to be expected to spend it. So now you're going to end up with 200 people working for you when you actually needed 10. And you're going to have this huge valuation, and that means some other time in the future when you go to raise money, you're going to basically have to take a down round. It's very painful. So somewhere you've got to somehow resist this, kind of process, and it's counterintuitive because, what do you mean? I should take less money for my stock? I mean, but these things that are going to drive up your valuation and drive you into expanding way faster than you can. And as much as I love the VC business, the longer you can push off actually raising that money, the better.
I think that with that, a recommendation to startup companies is first, there are different accelerators, including here at the Tel Aviv University. There are accelerators which can help you and give you mentoring about how to raise it. You can contest also in different programs to raise very seed money to help you starting this activity. And the most important thing, you need to solve someone's problem. Do not focus on the technology. Look what they are saying now. Try to find something that someone is interesting. You solve, you generate something which is valuable for them. With that thing, I would like to say thank you very much to our panelists